Hey guys, welcome back to Poor Man Investor, a channel that guides average Tom, Dick and Harry to become a little richer than yesterday. In today's video, we are going to list down 4 types of assets that are safe and less risky which you can invest in, and this will make you a little richer over time. This asset will be explained in dummy style so that everyone here can understand and invest with a peace of mind. In my previous video, I had talked about how we can become a millionaire with a $3,000 monthly paycheck with simple step-by-step actions that can be taken by anyone. If you haven't watched it yet, I definitely want you to hit that video. Most of us know that investing can be rewarding to our financial health, and we want to get started as soon as possible. We have friends telling us about their investment on Bitcoin, stock and property, and when they invite us to join them, we are often reluctant. Most of the time it's because that we are not sure about those investments, and therefore some risks and insecurities arise in us. Secondly, we do not fully trust them because they are not professionally qualified. Most probably, the last reason is that we are afraid of losing our money. Therefore, this video will show you the 4 simple assets that are less risky, easy to understand, so that any one of us here can invest in. Without further ado, the first asset is Real Estate Investment Trust, REITs in short. It's an asset that we can invest in and get a rental income in the form of dividend. Normally, this dividend will be paid to us twice or 4 times every year. In the US, you can invest in some of the big names such as American Tower Corp, Crown Castle International Corp, and Prologis Incorporation. In Singapore, many of us have heard before of Keppel REITs, CapitaLand REITs, and Fraser REITs. When we buy into REITs such as AMT or CapitaLand REITs, we are basically buying into a company that owns a group of properties such as King of Prussia Mall, the largest mall in the US, Dell Amore Fashion Center, and Singapore Airport Jewel Mall. These properties are then rented out to big brands such as McDonald's, Chanel, Starbucks, and many more. In return, AMT and CapitaLand will collect rental income from these big names on behalf of us. And finally, we just need to log into our bank account and wait for the money. For illustration, if you have bought 100 units of CapitaLand REITs at the average price of $1.80 per unit since the recovery of the pandemic, the total cost will be $180. An estimated dividend of $9.40, which is 5.2%, will be distributed to us in year 2021. This interest rate is better than placing your money in the bank. If you happen to bought this during the start of the pandemic at the lowest price of $1.52, the dividend interest will be around 6.2%. Before you rush out to buy any REITs, you have to know the pros and cons. REITs are easily accessible by most of us. They are easy to understand and not that risky. They are also a good investment to fight against inflation rate. For those who want to build passive income, REITs is a very good source of investment since they pay out a few times every year. However, during bad times, dividend might be reduced. Risk return might be low compared to other investments or when you buy the units at a very high price. Lastly, the price of your unit will change every day. I strongly recommend you to invest in this asset as REITs are easier to understand than any other assets. And most importantly, they are considered safer compared to other types of assets. Moving on to next asset, and that is bond. Bond is a form of IOU that's returned to you in exchange for the money that you have lent out to some companies, institutions, or even a government for a period of time like 3 to 10 years. In return, they will pay you with interest up to 4 times every year. To give you an example, during the pandemic, Boeing and Singapore Airlines, both from the aviation industry, had actually reached out to the public as they are in need of money for their operation. Announcement of the issuance of bond, which is the IOU, was made. If you're interested in their bond, you can buy it from them. For Boeing Incorporation, they wanted to borrow for 10 years and they promised to pay you an interest of 5.15% over 2 times per year. So, if you're happy with the interest rate, you can buy their bond starting with $1,000. If you have bought $100,000 from Boeing, you receive more than $5,000 as income every year. A pro tip over here, there are tons of different bonds out there. The yearly interest they promise to pay you range from a few percent to more than 20%. Company with lower credit rating will offer you a higher interest because they are deemed as dangerous. So, don't be greedy and exercise your wisdom. The US and the Singapore government gives you around 0.1 to 2% because of their good reputation, and most likely they are capable to repay what was borrowed from you. Whoever has a better level of credibility can command a lower interest. If you don't like what the government offers you, there are many other reputable companies out there offering a better interest. Now moving on to the pros and cons. Unlike REITs, bond promise to pay you fixed interest regularly every year which cannot be reduced or changed. You can see this as a form of building up your passive income. Your money is protected as long as you hold it till the maturity date and provided they don't shut down their operations. The terms and conditions such as the interest they promise you, the duration of the IOU, and other criteria written over here are easy to understand. Another good thing about bond, you don't need to lend them in huge sum, you can lend them as little as $1,000. However, some bonds are more difficult to access because they are only offered privately to the VIP. This is because they prefer to lend it in big chunk like $200,000 per bond and not your peanut $1,000. In the case of bond, your money will be locked out as according to the loan period stated on the IOU. If you want to break the bond, there might be some form of penalty. And sad to say that sometimes Tom, Dick and Harry might have some difficulties in judging the credibility of the company. Bond is a very good asset for passive income. The tip here is to choose safe and sound companies or government bonds to invest in. Once again, as long as the borrowers is in operations, you'll get exactly what the IOU has stated. Moving on to the third asset, which I think personally is the best for you guys, and that is S&P 500 ETF. They are the top 500 largest US companies which most of you will have probably heard of. It includes Apple, Facebook, Google, Amazon and many more. Some of you might be thinking right now, where am I going to get all the money to invest into such companies? Let me explain. Since there are many of us who only has little money to buy into these big companies, a third party which is called a fund house is formed to accumulate all of our money into a big pool. One example of this fund house in the US is Vanguard. From there, Vanguard will then take our money and invest into S&P 500. In the case of Vanguard, they name their S&P 500 investment as VUSA. Different fund houses name their fund differently, but normally all of them host the same type of shares just like Apple, Google and Facebook. So if you have bought VUSA from Vanguard, you have officially invested into a group of best companies in the world and you are also betting on America's future. Just to let you know, S&P 500 and America has performed better and better for the past 30 years. Even in bad times such as the recent pandemic, 2008 financial crisis and the 9/11 attack, these 500 companies tend to bounce back and perform better over time. If you have placed $10,000 in year 1990, you will get back a total of $360,000 today. Ooh, 36 times. Have I mentioned that Warren Buffett, one of the richest men in the world, also encouraged the majority to invest in S&P 500? However, a disclaimer over here, the past record is no guarantee of future performance. You have heard this before, don't put all your eggs in one basket. S&P 500 allows you to diversify your portfolio since you are buying into the top 500 companies. And if you are in need of cash, you can sell it anytime. S&P 500 probably have a higher interest return compared to REITs and bonds. And the best thing, you can access S&P 500 on many platforms. However, I need to tell you this, you also stand a chance of losing your money, but the chance gets smaller if you hold it for a long time. Buying S&P 500 requires a small fees for administrative purpose. And for those who like the smell of cash, then this might not be suitable for you because at times, they only give up very little dividend just like in the pandemic year. The fourth asset that you can invest in is called stocks. Some call it shares. This is my personal favorite, however this is not for everyone. Share is a certificate of ownership of a company. If you buy one share of Disney or Singapore DBS Bank, it means that you have a part of ownership with them. In another word, you are a little boss of these two companies. Whatever Disney or DBS Bank earns, you get to share their profit. The profits are then given out as dividends to us, the shareholders. However, some of the profits are retained to build more Disney parks or to invest in new projects. Disney and DBS have good track record of giving out dividends in both good and bad times. So buying into their shares will definitely help us to grow our money over time. If you had noticed that DBS has given out a yearly dividend of 60 cents to $1.50 per share in the recent years, it's no-brainer to invest a decent amount when the share had hit between $17 to $19. Because it will give you 8% worth of dividend every year. Don't hit yourself if you have missed the boat, just wait for the next one. Let's move on to Disney. If you had invested $10,000 in Disney in the 90s, you'll get back around $210,000 today. The interest return is averaged to be 10.5% per year. A pro tip over here, Disney grow your wealth through its share price and DBS Bank grow your wealth through dividend. Both are also good in building your wealth. Now, the pros and cons. Investing in stocks might grow your money faster than the other three types of assets, as your interest return is higher. You also have the freedom to choose the type of business that you like and invest in. And if you're not happy with the companies that you have invested in, you can encash it anytime in the market opening hours. And the best thing about stock is you can easily access to it with little to no fees. However, you might lose all of your money if the business you have invested has failed. And if you have just invested in one company, it does not diversify your portfolio. People who have a weak stomach might not be able to handle the daily share price fluctuation. And some busy Tom, Dick and Harry might not have the time to search for a safe and sound company to invest in. A pro tip over here. Investing in stock will not bankrupt you as long as you are not buying on margin or from borrowed money. If we have invested $10,000 in a certain stock, the only time we would lose this $10,000 is when the business has closed down. So in order not to lose any money, all you need to do is to select companies that have a long-lasting life. All in all, these 4 assets that we have listed down will definitely grow your wealth over time. All you need is time and patience. Now, it's time for you to take action and find your respective broker or platform to start investing. The more money you invest now, the earlier you can retire. Speaking of learning more ways to earn more income, I want you to subscribe and hit the notification bell because in my next video, I'm going to talk about the different ways you can build more streams of income by keeping your day job and allowing you to earn more money for you to save and invest. So, if you're interested in learning more about side hustle to generate more streams of income while keeping your full-time job, make sure you subscribe and hit the notification bell right now. In the meantime, while waiting for the next video, make sure you also check out these two videos right here. Let me know in the comment sections if you have any questions or any stock you think is interesting for me to cover. If you have learned something from this video, please give it a thumb up and share this video so that someone can benefit from it like you do. I love to talk about money, finance and investing, so stay tuned for more wonderful tips and I really appreciate you guys. Till then, adios.